It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, it's another Friday and welcome back to the Real Estate Breakfast on the last day of our working week. Yes, once again, heading towards another weekend. And if you are a new listener, great to have you along this morning. Hope your week has been a productive one. Don't forget, if you've got any questions, you can send them through to our email address, which is myrealestatepodcast@gmail.com. Friday, July the 25th today. Now imagine doing everything right. You have built a successful career. You've owned property in the past. You've never missed a repayment when it comes to mortgages, yet you find yourself shut out of the housing market at 52. This is the story of Justin. Despite having $300,000 in savings, banks won't lend him enough to buy a modest home in Melbourne. He's stuck, too financially secure for support, but not secure enough to buy. Justin's story highlights the growing crisis facing older Australians caught between retirement and rising housing costs as government schemes remain largely out of reach. And Justin is joining us this morning. Justin, welcome into the Real Estate Breakfast. Great to have you on this morning, throwing a spotlight onto this problem. And could you have ever imagined that you'd be landing where you are at 52 in life?
Thanks for having me. Absolutely not. You make some life choices. Not everything always goes to plan, and been separated twice now, and I have a couple of smallish children. Yeah, but I certainly didn't expect to end up in this situation. No, not at all.
Can you take us back to the moment when you realised you couldn't secure a loan? What was the most frustrating part of that process?
It's just crazy. Property prices in Australia, in my opinion, and a lot of others, they're just blown out of control and unaffordable for so many people. And I've been in a position before where I've had a huge mortgage, and at the time I was like, this isn't fun. And now the average is higher than that. So I don't want to be in that position again, but I still want to be able to get in and buy something. And when you're told that you can only borrow a couple of $100,000, I'm like, well, that's just not practical. That's not going to work for me when my kids are 12 and 14. At the moment, I'm renting a 2-bedroom apartment, and that's not ideal. Like, they're getting to an age where they need their own space. They need their own bedrooms. Basically, I'm not being able to borrow that sort of money to be able to purchase something like that.
Yeah, so $300,000, you've got that in savings and a strong repayment history. It's quite interesting with the banks because they don't actually take that into consideration, which, for people like you that have owned a couple of houses, you've never missed a payment, you would think that would shine favourably on you, but no, it's the age probably and a couple of other things going against you. So why do you think the banks still see you as a risk at 52?
To be honest, I am really not sure. Like, brokers who I've been dealing with, they've said it just comes down to serviceability. Being self-employed probably doesn't help me as well. Like, obviously, put together a tax return that, financially works for me. Like, it's all above board, but obviously you want to reduce your tax as much as what you possibly can. But the flip side of that is obviously it then looks as if your income isn't as high. So that's part of the problem. I would have thought the security in a property should allow me to actually be able to borrow a decent amount of money. At the end of the day, let's say I can't afford the property, which, I've never ever missed a repayment. Isn't that the whole reason that the property is secured by the bank? They'll sell it out from under you. I don't know. Maybe that's too hard work for the banks. They just don't want to do it. I know that's, a worst case scenario, and I couldn't imagine that happening. Yeah, I'm at a bit of a loss.
I think I read somewhere you're putting in the $300,000 equates to 40% deposit. Is that right?
Yeah, well, I was looking at a property recently that was just over $700,000. It was quite unique. It was a church which I was wanting to turn into a residence. they could not get past the fact of what the structure of the building was, and I could not get the loan at all. I was told basically if I want to buy it, it's a cash-only deal.
You said that you've got some mortgage brokers, a couple that have been working with you. What do they say? Are they saying this is really weird that you're not able to get across the line, given the fact that, yes, you're in business, everybody works the tax to their advantage, but if you read the numbers are the numbers, and it's not a massive loan anyway, and if you're putting in 40%. So the mortgage brokers, what do they say?
Well, they just talk about how conservative essentially the lenders are, and they're just not risk averse at all. And yeah, essentially when they equate age, income, dependence. The other thing that I find is quite strange too, it's not even a case of being able to get the money. It's also a case of having the property which they're prepared to loan against as well. Like I'm literally having to present the property up front and see whether it'll get approved for a loan as well. So I find that really restrictive too. Like I'm a designer, graphic designer by trade, but I also paint, and I'd like some sort of space where I can actually do that. At the moment, I'm living in a 2-bedroom apartment. I quite literally do not have any floor space where I can lay down a canvas and actually do any work. That's kind of a separate issue, sort of. Comes down to, trying to find a property that's going to fit my lifestyle, it's going to accommodate myself and my children. And the government, they're wanting to push the apartments. They want everyone to live in an apartment. This isn't Southeast Asia. It's like that doesn't suit everyone. I'm sure not many politicians who are pushing that agenda live in apartments.
Yes, so in terms of that space for painting, it sounds like the church would have been ideal for that. Have any of the government schemes like Help to Buy or the Family Home Guarantee come close to actually helping you, or do they feel more like window dressing at the moment?
In a nutshell, I think they're a complete and utter waste of time. I can't remember which one it was off the top of my head, but there's only 5 lenders who are actually a part of it. When I approached them, I was told I had a total borrowing of $200,000, which was like, well, what am I going to do with that? That gives me a total of $500,000 inclusive of stamp duty and legals. What am I going to buy? What, a 1-bedroom apartment? That's not going to fit my needs with 2 children.
And if you could tell policymakers or lenders one thing about your situation and others like you, what would that be, Justin?
They offer support for first home buyers grants, which ultimately all that does is force the price up of real estate. I don't think it helps anyone at all, because ultimately if you then come up against a cashed up boomer, for example, at auction day, they're going to probably blow you out of the water, and they can pay overs every day of the week. So that doesn't help the matter at all. But for people in my situation, there basically is no support, and there's no consideration also. I've tried to tackle this from so many different angles. And for the church, for example, which I was looking at, which was, $700,000 for quite a big property. It was just out of Melbourne. If I was to buy something, for that price range, I'd be flat out getting a 2-bedroom townhouse in Melbourne. So this was an absolute steal, and I still couldn't do it, even though I had said, obviously my parents are older. They're not going to live forever. There's going to be an inheritance at some point in time. Not enormous, but some money. That isn't a consideration coming into play either. It just makes it incredibly difficult. I think the lending criteria, it just has to change. It's way too difficult to actually be able to access finance.
Now, you mentioned that you've got a couple of kids. Have you thought about moving a little bit more regional to get into something a little more around that 500K mark, I guess?
It's just not practical with the children. They live with their mum, who lives in the inner west in Melbourne. They're enrolled in schools here. It's all their friend networks are here. Like my son, for example, goes to a sports academy. So it's not practical to, move an hour and a half outside of the city. He would have a 3-hour commute to school each day. Yeah, and that doesn't take into consideration then sports training outside of hours as well, like for his football club, his swimming club, and my daughter, her netball teams. It just wouldn't work. It's it's great And I noticed there was some comments on the age about moving to a regional area where it's more affordable. That's great in theory, but from a practicality point of view, it doesn't work. I can't pull them out from their life as they know it, particularly with schooling and their friend network. It just doesn't work.
Where to from here? It's completely a stalemate, isn't it? I mean, the frustration of this, wanting to get into the market, do the right thing, have somewhere where the kids have got their own room. It is just happening all too often to a lot of older Australians up and down the country.
Yeah, I mean, ultimately for me as well, like I'm kind of at a point, like this shouldn't be the case. Like I'm 52. I don't consider myself old, but I've kind of almost given up on the thought of getting my, dream home as such. All I'm interested now is buying something so that I can generate some wealth for my children so that they have something down the track. Like the apartment that I'm currently living in, that was built 14 years ago. It sold last year for an additional $5,000. So they essentially lost money on it. By the time they paid stamp duty, mortgage repayments, and so forth, they've lost money on it. The flat next door lost $60,000 in that period of time. So buying an apartment isn't an option for me because, I could buy any number of apartments in, say, Footscray and high rises, but when there's, half a dozen of them that's for sale at any one time, you're never going to get a decent price for them. So because the competition's, why would you pay extra when you've got another 5 that you could choose from? So that's not an option for me to generate any wealth for my children down the track. Again, like I said, I'm open-minded to this. I'm looking at all sorts of ideas. So I'm actually looking currently at even commercial space. With the right zoning, I can put up a couple of walls to convert into bedrooms, put in a kitchen, put in a bathroom. That could possibly be a lot better option for me. It could be a lot cheaper than buying a traditional residential home. Actually, I think it would be from the research that I've done. And probably down the track, I'll probably get a much better return.
Well, if there is somebody out there that is doing a development on commercial space, you're listening to the podcast, if there is something that you think, well, wait a minute, I might have something that falls into the price range, get in touch with us. We'll pass on the details to Justin. Or if you need any work done, you said that you're a graphic designer. So if you've got any graphic design work, get in touch through us and we'll pass all the details on. It is a very frustrating one. I can hear the frustration in your voice, Justin. You just got to keep going, though, one step after another. Something will at some point break. When you get these sort of obstacles, something will come out of left of centre, something that you least expect from some corner, and maybe that'll just help you on your way. But thanks so much for sharing your story on the Real Estate Breakfast this morning, and do keep in touch. Let us know if anything does change.
Will do. Thanks for your time. Really appreciate it. It's great to be able to actually share this.
Every morning from 6 a.m. across Australia, we deliver you the latest property news, commentary and predictions from Perth to Cairns and from Melbourne to Brisbane, 7 days a week.
And this downsizing phenomenon, I think, is in part due to unlock that cash locked in their family home and to give themselves a prolonged period of independence and independent living by downsizing to something a bit more manageable.
You mentioned that downsizers often feel like first home buyers. What specific market trends or surprises are catching them off guard in today's market? Because some of these people might not have transacted in 30 years, so I can understand why it does feel like suddenly, it's come 360. We're back to first home buying again.
Yeah, that's definitely right. It's definitely a much faster paced market. DocuSign wasn't around in the 90s and we weren't instantly doing contracts on the fly. And so we find that older demographic, they really benefit from some guidance and assistance. And that's what we're seeing at the moment. Up to 30% of our clients who are owner occupying are that specific downsizer demographic.
We connect you to the best real estate information across Australia. The Real Estate Podcast.